and people had thought it would be a bit more than that.
So, Liz, 2 points here. First off, what you do, you're in the world of investotainment, right? You are there to bring the news to the people that are watching you. Good, bad, and different. You report the news. You're not necessarily interpreting it, you're reporting it. I think, you guys do a fantastic job. So I would have an issue with that person on Twitter. Now, let's get to what you just talked about. Let's get to that jobs report this morning.
Yeah.
Everybody liked it at first because it was a light number, meaning, okay, light number, things are slowing down, Fed's got to pull back a little bit. That's what the initial reaction was. But like everything else in the market now, the pulse of the market is on a hot button. The Fed, no one else right now in this marketplace has that camera lens, has that Polaroid to look ahead and really know what's going to happen next week, next month, 3 months from now. So for the market to react like it did today, and like it has pretty much every day for the last 3 weeks, just on one economic report or one tweet or one news headline, that's a tough thing right now.
Well, it's been a bunch of headlines, a flurry of them, Mark, and a lot of it has to do with the perception that the U.S. economy is slowing, but also this trade issue, the arrest of the Huawei executive, and whether that makes things a little bit more wobbly between the U.S. and China, because there was so much hope about that. But on top of it, the Federal Reserve, we're going to go a deep dive. We're going to do a deep dive a bit later in the show, but we're seeing headlines right and left that now you've got at least Bullard, who's been pretty dovish, to say, you know what, the market is showing via these yields on treasuries starting to flatten in the curve that the Fed's gone too far. Has the Fed really gone too far? We're still barely up off the floor here.
You know what all these headlines have in common? Muddled and mixed messaging. And that began early in the week, where the U.S.-China trade story was a mess from the trying to understand what was to be understood about what actually happened. And that it really is set at the feet of the administration, where there was no joint statement from the U.S. and China and backtracking thereafter. I would say, it's interesting, Liz, we think now about the fact that we are now in a process where the Fed is going to be holding news conferences after every meeting for the foreseeable future.
Right,
and
transparency,
now we have,
they say.
Well, that's, as journalists and as investors, we love that. But when you're giving mixed messages from that early October statement from the chairman to what we got earlier in the month, and I would dare argue people are misreading a lot into all of that, the market's very confused, and the U.S.-China trade tariff risk creates a great deal of uncertainty. It's hard to plan.
Is anybody worried? Anybody? Let's put all four on the screen. Me and my three traders and my gang. Anybody worried? Scott, what do you think?
Well, I'm actually worried about the divisiveness or the division between politics and what the Fed is doing. If we now start looking, and maybe the Fed does not raise in December, that is really going to bother me, because then that's going to add more uncertainty to the marketplace, and people are really going to start questioning, is the Fed in and of itself, or are they following the political message?
Tim, were you concerned at all that seconds before, minutes before the announcement of the jobs number, President Trump had tweeted, things are going wonderfully with China and the trade talks? Did that feel, there's some accusation that was a little bit of attempted manipulation, but certainly hasn't helped the markets right now.
No, I don't think so, because the jobs number certainly was not an outlier today. I mean, it came in a little light, but I think that you had many more people that were out of work due to storms in the Midwest during the survey week than they had forecasted into their model. You had 20,000 people added in the retail sector, which you want to see retail people added this time of year. The average wages might have been a touch light, but in general, this number was not an outlier number. This is just a carry-through of selling for a number of different reasons, from institutions and hedge funds maybe pressing their bets to the downside that we've seen for the last couple of weeks.
Okay, and Mark, you get the final word here. How do you see the economy? Lyle Brainerd, who's the vice chair of the Fed, just came out about an hour ago and said still looks really strong.
Absolutely. It isn't what the economy is doing right now. It's everybody trying to get their arms around what happens next year. And frankly, most of us aren't very good judges of that. But our just completed survey said the downside risks predominate in 2019.
Great to see all of you. Mark, Tim, Scott, have a good weekend. Thanks so much, guys.